Welcome back, folks. We had the Dow Industrials finish up 293, NASDAQ up 113, S&P's up 30, and we go over into the futures market, folks. You know, what's been in the news, like in a huge way, is El Nino, okay? When we start talking El Nino and you start talking futures, you can start talking what? You can start talking agriculture. We have our man, Mr. Sal Gilbertie. Sal is the president of Teucrium Funds. Teucrium Funds. We want to welcome Sal to TFNN. Now, Teucrium, folks, has 4 separate ETFs that trade the futures markets. Well, that trade in the ETF market and the NYSE. You'd like to trade wheat? W-E-A-T. You're trading corn? C-O-R-N. You're trading beans, soybeans, S-O-Y-B, and sugar is C-A-N-E. Sal, welcome back to TFNN.
Great to be here, Tom.
Hey, you know, it's so funny, man, is that, I started off with El Nino, and we have a lot of people that absolutely love trading wheat, beans, wheat and beans mostly. Some of them trade sugar. But so I had a guy on this morning, right? And he's absolutely convinced, and I love this guy. This is Dave from Clearwater, okay? And, he's convinced that, hey, man, wheat's the number. And actually, the guys from TD Ameritrade, one of the guys that does the show, he's a big wheat trader. He loves the grains right now. And then this was yesterday morning, rather. Then today, I'm waking up. No, it was this morning. And then today, across on Bloomberg, another guy comes out and says, because of El Nino, now it should be hotter versus colder, so my point is that I guess whether you're a bull or a bear, inside your funds, you can trade them both ways, right?
That's very true. The ETFs are liquid. You can buy and sell, and actually soybeans, corn, and wheat, all 3 of those ETFs have options that trade on them. So people can go long or short to their heart's content in any manner they like.
Sure. Now, if we can start, let me ask this. When we start with corn, I knew corn was huge, but I guess corn is the largest agricultural product that we have, right?
It is. It's the largest by production in the United States by far. It consumes the most acres. You have billions and billions of bushels produced. The United States alone will produce, in any given year, give or take 13 or 14 billion bushels. So there's enormous production that comes from corn. The number 2 crop is actually hay. But you can't trade hay. It's for animal feed. Corn's number 1 use globally is animal feed, and hay is used to feed animals. Feeding of animals is truly the most unheralded, unknown aspect of most all of agriculture.
Yeah, that makes sense too. That totally makes sense. I was talking to a guy about hay last week, that he has a lot of hay, and I was wondering. Like when they put it, you see it in the fields, folks, and it's rolled up. And I was always wondering when it gets rained on if that means a thing. They tell it doesn't mean a thing because I guess it will only penetrate it like a quarter an inch or something, right? So they can roll it up and then they bring it in. Now, the last time that you were on, you were giving us a great education about the ETF structures and in the aspect of where you should be trading them. And what I'm talking about here, folks, is this. This is really crucial to understand. Inside the corn structure, right, as you're coming in and out of them, right, can you talk a little bit about, number 1, I know that the future is backing it up, but you can go in and out of these as long as the pit is opened, right? So can you talk about how that works?
Well, you can trade, the corn fund, C-O-R-N, on the New York Stock Exchange the whole time the New York Stock Exchange is open.
Yes.
And so the thing is, you get your best liquidity with any ETF when the underlying that ETF is based upon is also trading. So
Thank you. That's what I was trying to get to, right.
Yeah, that would be until corn futures close, and call it 2:30 Eastern, 1:30 Central.
Okay, great.
When those futures close. And so if you trade, basically your best time to trade these things is between 10:30 and 2:30. There's a 4-hour period. Everybody's paying attention. Futures pits are past their open. Everything is going gangbusters. Everybody's happy. They've gotten past their first hour on the stock market, because remember, machines make the markets in ETFs. And so a guy who's making a market in an ETF is really making it via a machine, and he's not just watching the ETF you happen to want to trade. He's watching probably many dozens or even hundreds of ETFs at the same time.
Yeah, no, it was a great point, because we know how many people trade ETFs, and at the August 24th open, not your ETFs because they opened later, of course, but on August 24th, what had happened with the Qs, like the Qs claimed that they traded 84. Well, I know they didn't trade at 84. I was right in front of them. But they had a problem, okay, because of that fact, because the NASDAQ futures were down limit that morning, you know. So it's great to understand when we're trading, you know, wheat, corn, beans, arcane, you know, what is going on there. Now, talk to me a bit about how the crop reports come out. Now, they come out, do they come out every month, the crop reports?
Pretty much every month.
Okay.
They come out generally the 10th, 11th, or 12th of the month. I believe the next one is September 11th.
Yes.
And they come out, and those are the United States government's best guess on crop progress. And so different times of the year focus on different things. The most important few are going to start coming out this next report, September 11th. And then the December report is really, really crucial because that pretty much marks the end of Northern Hemisphere's harvest. So there's a pretty good idea of what's going on. And then the first few reports in the year, you know, January, February, that's a look back where the government kind of finalizes its numbers. Those become official. And that's really important because those are the goalposts, if you will. Those are the metrics that everyone sets their look backs on. And of course, because everything's a projection, given when you put a seed in the ground, you don't know if it'll grow or not, you really need a baseline from which to start. So when those numbers are finalized in the beginning of the calendar year, looking back at the crop year, those are very important. Then you get really important reports come springtime because you want to know the planting progress. Are farmers getting into the fields in time?
Right.
Then you know, it kind of goes kind of quiet during the summer, although the last report in August, you know, as we saw, I think I was on that day, we had some big action in the futures pits, some limit moves, and that, of course, the ETFs kept trading. They don't care if it's a limit move or not in the pits. But importantly, these things set the metric by which projections are made, and the projections are really important.
Yeah, you know what's really cool is really getting. It's amazing to me that, and I'm including myself in this. You know, through the years, I started trading futures maybe about 20 years ago, but the reality is that for so long, not really understanding them, and this is stuff we eat every day. It would seem like it's the most normal stuff. Do you know what I'm saying? So it's like,
you know, that's a really important point because most people invest in what they know, and there are many investment professionals that have always recommended that. And the simple truth is most people don't know how much they actually know about grains. They are not conscious of how grains are touching them. I think on last time I was on, we pointed out how pervasive corn is in the economy.
Yes.
It's really important. And of course, you know, soybeans are also in the fuel supply through biodiesel.
Sure.
Ethanol plants can actually take wheat as a feedstock. So when there's poor quality wheat, it goes into an ethanol plant. So wheat is probably the least tied to the fuel supply, but it is tied to the fuel supply. And of course, sugar in Brazil is the #1 producer of ethanol besides the United States, and they use sugar. Can
you just hang with us for a second? We get a quick break?
Yes, sir.
Awesome, man. We appreciate it. You stay right there, folks. Sal's going to be coming right back. Now, folks, the website is teucriumfund.com. It's TEUCRIUM fund.com. Sal and I are coming right back, folks. You stay right there. Welcome back, folks. We had the Dow finish up 293. NASDAQ was up 113. S&Ps are up 32. Guest today is Sal Gilbertie. Sal is the president of Teucrium Funds. And, folks, the website is teucrium.com. I happen to be at the Sugar Fund, and so I basically gave you that wrong website. It's TEUCRIUM.com. So, Sal, when we're looking, you know what always intrigued me is that coming into the winter, right? When we're talking about, you know, basically something we eat every day, and, you know, whether you're eating Wheaties in the morning, right? The wheat crop, I guess, you know, the winter wheat crop, it's amazing to me that I guess they plant it and then you hope that it snows and it stays covered, right?
That's right. You plant the winter wheat crop in the autumn, and then it comes up a few inches, and then you hope it gets good snow cover to protect it from bitter cold.
Okay.
Because snow acts as an insulator. And so if you make it through the winter, and that's a big deal, you have a crop to harvest come basically June-ish up here in the northern hemisphere.
Yeah.
And then you know the guys who plant normal wheat, so just called spring wheat.
Yeah.
That wheat you plant in the spring, just like same time you're planting all your other crops.
I see. Okay.
And so wheat is unique. It's different from corn and soybeans in that wheat actually has two harvests. It has a harvest in the spring, early summer,
yeah,
and then it has a harvest in the late summer and autumn, whereas soybeans and corn have a harvest in late summer and autumn. And there's an interesting thing that we're in the process of putting out, so I can't speak too much about it, but
okay,
there's a very strong seasonal in the corn markets because two countries, China and the United States, are the top two producers of corn in the world, and we harvest our corn at the same time. We're both in the northern hemisphere. So essentially with any crop, when you harvest that crop, you're harvesting all of it at the end of the season,
yeah,
and then there is no more growing. I mean, okay, there's more growing in the southern hemisphere, but with any crop, once you harvest it, until you plant another seed and it grows, all you have to live off of are your stockpiles. And when all your stockpiles come to market in, say, a 3-month period for the year, that can provide an opportunity for investors sometimes to layer in. Statistically, that pairs out, but we can go over that at another time.
You know what's so cool about commodities is that I remember, whether it's 3 or 4 years ago, is that, corn was through the roof. And, I mean, the farmers, it was almost like they were planting corn on the sides of the roads, under expressways and everything, right? And it's so intriguing, which I can totally understand, but then as soon as there's too much of it, right, then the price goes all the way down until there's not enough of it, and then, like, the whole cycle starts again, right?
That's right, and that is what provides investors with really good opportunity because farmers can respond quickly. So if you have a gold mine or an oil well and the prices go up, so you need to respond by putting more supply in the market, digging that mine might take decades in opening a mine.
That's right. That's
digging
right.
Digging a well could take months or years.
Yeah.
But farmers, in 1 year, they're back. In one growing season, they're back. So prices go pretty high. They're back. I mean, you started the show with a mention of El Nino. The last time El Nino affected things really badly in our markets, the four that we concentrate on, was when wheat. And that happens to be when wheat made its all-time high. And the reason is that an El Nino can often cause heat and dryness in Australia. And Australia is either, depending on the year and how they're doing, whether there's an El Nino or not, they're either a top 10 producer or a top 5 producer of wheat globally. And they basically had back-to-back droughts. And the second year of the El Nino driven drought in Australia caused wheat prices to hit their all-time high ever. Wheat did not make the highs that we saw in the bubble that say all the other commodities did at that time. It had made them before due to a drought. So what happens is, back to your cycle theory, farmers can respond. They respond quickly like they've done now. There's plenty of corn. There are plenty of soybeans. We're approaching the cost of production of corn. When you look at the cost of production of corn, most people say non-land costs is somewhere in the low threes to low $3 a bushel. But when you put all the costs in, most people's estimate is between, essentially, call it $3 and $4, and that actually happens to be the low in 2009 on continuation charts for corn. We actually stopped between $3 and $4. Well, there's a reason for that. That's cost of production. So you're not going to trade an agricultural product, especially one with the demand that corn has. And corn and soybeans are experiencing record absolute demand, meaning each year the world is consuming a greater number of bushels. Now, we have plenty of stocks this year, which is why prices are approaching the cost of production or in the cost of production range for both of those commodities. But what happens is, it's not a matter of if, it's a matter of when. We live on planet Earth. We're at the mercy of the weather. We're at the mercy of the biblical things of floods, fire, famine, and farmers live those things every day. So when grains or any agricultural commodities cycle down, like the grains have done now, like corn, soybeans, and wheat have done, and sugar as well, that is an opportune time. It can be an opportune time for investors to layer that into your portfolio. When you look back, depending on the commodity, corn, soybeans, or wheat, you generally have a supply disruption. And remember, demand is really constant. So these are supply-driven markets with prices.
Yes.
what happens is if you have an interruption of supply with demand growing, suddenly prices tend to spike to react to that. Now, farmers may react, but you've got a commodity that can go up very significantly, and it tends to happen every 3 to 5 years in the big ags of corn, soybeans, and wheat. So, we keep our eye pretty closely on them. We're entering the 3rd year of bumper harvests. So, last time corn spiked, it went from the $3, $4 range all the way up to the $8 range. Now, nobody can predict what it's going to do, but when you have 75 million new people on Earth every year that need to be fed, and their animals need to be fed.
You know what's really interesting about that? Being a baby boomer, and I'm at the beginning of the baby boomers, I'm like 5 years into it, I remember just saying to people, all you have to do is be ahead of everyone else because of what you just said. It's kind of neat that when there's more demand than there is supply, you actually can almost make mistakes in life and like, hey, there's so many more people coming up. It's like, okay, man, they smooth some of these things out. Now, what's really cool, of course, inside the ETF structures, a lot of people get worried about futures, but in the ETF structures, they trade just like a stock versus, basically putting up shorter margin and, you can basically, go up or down a lot in the futures market. In the equity market, folks are used to it, no doubt, right?
That's correct. And, the fact that we put these things on the New York Stock Exchange, the fact that they are unleveraged ETFs, they're fully collateralized, whether or not you buy them on margin, that's your decision.
Sure.
But our funds in general are designed to go up when the price of corn, wheat, soybean, sugar go up, and down when they go down. So you can obtain these things, put them in your portfolio when there are these cyclical lows, and anticipate when there may be a supply disruption, which, as we say, if you look back in history, it's not a matter of if, it's generally a matter of when.
And it's a great diversification, right? I mean,
that's correct.
That is absolutely crucial also. Listen, folks, you can go over to the website. It's Teucrium.com. It's Teucrium. We're going to have a banner right on our site, folks. We're talking wheat, corn, soybeans, or sugar. Sal, thank you so much. You have a great one, a safe one. We look forward to having you back on again.
Thanks, Tom. Appreciate it.
Okay, take care. Bye-bye. You stay right there, folks. We're going to be coming right back. The symbols are WEAT, CORNSOYB, and CANE. We're going to be right back, folks.